Hey everyone, Rich Monroe, B&B Investing Group. Thanks for jumping on this week. I've got a friend of mine, Taylor, on with us. We're going to talk about acquisitions and purchasing short-term rental properties. Taylor's kind of a core focus expert on that topic. And so I'm kind of looking forward to hearing about what he provides for investors and how that works. Taylor, thanks a lot for jumping on. Why don't you tell us a little bit about yourself?
Rich, thanks for having me on. So I'm a classic washed up baseball guy. Had the dream to play in the league, and then that quickly burned out early into the college endeavors, and decided to just focus on being a college kid like everybody else. Very type A, so of course I naturally ended up in sales forever. When COVID hit, I had a client-facing sales job, so that was the first thing that got cut, and the blessing in disguise was I had all the time in the world now. So I wasn't fired. I just wasn't allowed to go sign new commissions. So I was kind of at this crossroads. And so I spent all of March and April and tried to figure out what I wanted to do. Simultaneously, I've been having this itch for real estate. So as I'm going through my sales career, I'm making more money. I was like, cool, I'm investing in the stock market, but real estate's that natural second layer for, a high income earner in the sales position. But I didn't know what I wanted to do. Do I want to flip? Do I want to do multifamily? Do I want to do BRRRR? Do I want to go get my broker's license? Like, had no idea, but I got to kind of pursue any and all options. And naturally, after checking out LTRs, checking out multifamily, checking out fix and flips, I came across short-term rentals. Now, me and my wife have been consumers on the travel side since 2015. So we were early adopters to the product, and we've stayed in over 30 Airbnbs across the world. I just never ran numbers from the host side, which I wish I had done back in 2015. It'd be a different discussion. So started diving in. I was like, man, there's some great opportunity here. And I just poured into YouTube content, read Bigger Pockets, read some books, blogs. I just consumed as much as I could. And then unlike a lot of people who kind of get stuck with analysis paralysis, I knew as a baseball guy, you got to take swings at some point. Otherwise you'll never know. If the bat stays on your shoulder, you'll never know what could have been. So started writing offers. My fifth offer, I got accepted on a cabin in Blue Ridge, Georgia. And that's the closest mountain range that us Floridians could just get in the car and drive to. I'd been a traveler there. I didn't have the level of data or insights I do today, but I was like, you know what? I like going here. I'm sure other people like going here too. So I bought that cabin, added a bunch of amenities design, listed it on Airbnb. And that was on a Tuesday night. I woke up Wednesday morning and had $6,000 worth of bookings, and I was instantly addicted. And I was like, oh my gosh. The sales job had come back, after, a couple months. Florida started opening up much sooner than the rest of the country. So, I was back to making money, but I had this Airbnb thing and I was addicted. And originally I was just going to do one a year for the next decade and then, quote unquote, be all set. But I got addicted. 4 months later, I bought another cabin there in Blue Ridge, and I was off to the races. So
Nice.
That's kind of how my journey got started and dove into this asset class.
Okay. And when you bought those in Blue Ridge, did you outsource the management or did you self-manage?
So self-manage, really wanted to learn, what it is and how it works. And I learned more in that first 3 months of operating than I did in 6 months of studying, consuming content. So one thing you'll never be able to learn. I use the Michael Phelps analogy. You have to know enough, learning before you get into this asset class. You got to know enough not to drown, but you don't have to be Michael Phelps before you get in the pool, because you're going to learn more as soon as you jump in than you'll ever learn studying on the sidelines.
Definitely. And so do you still have those units in Blue Ridge today?
No. So Blue Ridge got red hot. One of them, you quickly learn what is an ideal product to own in a market. So that first cabin was a 3-bed, 5 miles from downtown that stared at the trees. So a wooded view lot, they built 1 trillion of those. And all of a sudden I had way too much competition coming in. I saw the writing on the wall, sold, and I 1031 that into a beach cottage here in Florida. The second one had one of the 5 best views in Blue Ridge. Now, that's not my opinion. That's every cleaner, handyman, or hot tub person that ever stepped foot on the property. And I wish it was on the top of Bear Mountain. Wish I did not have to sell that. However, that property appreciated several $100,000 in under 20 months. And I quickly ran an ROE calculation, return on equity, to realize I have way too much equity versus the cash flow this is generating. And so I also sold that and rolled that into a different asset. So now Blue Ridge overheated a little bit. It is, if you dive into the data, the last 3 to 4 months actually yielding some opportunities. but that market just overheated where supply ran way too far in front of revenue. And so it's something you always kind of have to be cognizant of. But yeah, there is some buying opportunities popping up in Q4 and Q1 of this year.
Yeah, we've had a couple cabins up in Morganton, not too far from Blue Ridge, and last year was just horrendous in terms of occupancy levels. So I agree, the supply there has really gotten oversaturated. So where'd you go from there?
So from there, I bought those 2 cabins, and like anybody, I was like, cool, I'm out of money and I want to buy more. And so, I was talking, all of a sudden, I got my uncle who works for Oracle and my aunt, a lot of these other people are like, hey, Taylor, I'm in for 50K on the next one. I'm in for 100, because they were hearing my success and me and my wife talking about them. It was the only thing I'm talking about at this point at family gatherings. And so I was like, well, maybe I'll just like syndicate and raise, so I kind of was like, well, how do I raise money? How does this work? Lo and behold, I also started talking about my journey online. I didn't know what was going to come of it. So I just started tweeting every day about me and my wife's Airbnb journey. And, shameless plug at Mr. Jones STRs if you want to go follow me. But I just started posting every day. Didn't know what was going to come of it. And I get a DM from this guy who, no posting, had like 14 followers. And I'm like, who the heck's this guy? But he's like, hey, man, we're starting a fund. Would love to talk. And I was like, okay, like, who knows what this guy is? And lo and behold, that was the CEO of what is now Techvestor. They were a month in, had 6 properties under their belt, and they needed a numbers guy. And so I was sharing numbers before it was cool online. And, he got to know me, and, me being the baseball background. Yeah, I mean, I could stay disciplined to the numbers, help acquire short-term rentals for your portfolio, and 150 properties and 90 million worth of capital deployed later. They have the largest institutional fund in this asset class. So it's been super awesome to be a part of it and lead the acquisitions, for their fund. And so a random DM on Twitter from a no name back when I was just sharing. I kind of got really weird of how I lucked into this asset class at a scalable model was just sharing me and my wife's journey on Twitter to a couple hundred people, then a couple thousand, and 40,000 followers later. It's been a heck of a run.
Awesome, very cool. So besides that, have you also done other type hedge fund clients, or what's the rest of your client base look like today?
Yeah. So, I mean, we really work with anybody under the sun. So, now it's also expanded out to, high income earners, doctor, dentist, W-2. I'd say 70% of the retail clients are, trying to offset taxes. Then we get a big swath that are like, hey, I'm miserable at my W-2. I want to quit. How can I, generate cash flow? Hey, I want to retire my wife. And then there's some people who are like, hey, I want to diversify to equities and crypto. I like my job. And, I just want to build long-term wealth, buy some really good real estate in good markets, cover the monthly nut. Sure, if it makes a little bit, that's great. But, I'm going to pass these properties on to my kids. And that's kind of the great thing about short-term rentals. Everybody has a different why. And so when we build out an acquisition strategy, we start with what is your why? So, what are you looking to solve for? Is it cash flow? Is it depreciation? Is it wealth building and home value appreciation? Because here's the thing, there is no perfect market where you get all 3 of those. You're going to have to give and sacrifice on those categories. I wish there was a perfect market where you did get tons of cash flow, tons of appreciation, and tons of tax benefits and depreciation, but you sacrifice 1 or 2 of those other categories if you want to go all in on one of the SKUs. So understanding that is a good metric where we start with investors and also capital. So, transparently, you might love the idea of owning an Airbnb in Miami, but I can tell you, you're not buying a single family home for under $1 million. So right. Budget eliminates markets first. Same thing with like a Sedona. Yeah, awesome. The Red Rocks could tell you, you're not going to pick up a single family home. So we stay away from condos and townhomes. There is a lot of red flags and cons that, in our opinion, outweigh the pros. So we've exclusively, across the last 205 of these that we've helped with investors, just done single family homes. Doesn't mean you can't get a profitable Airbnb with a condo or townhome, but to us at scale and doing this across the country, the cons outweigh the pros in condos and townhomes. So we just stay exclusively with single family homes.
So does that hold true though in some of the beach areas where condos allow short-term rentals, or you just kind of stay away from them in general?
Still stay away from them. We'll buy 5 to 20 minutes off the beach, and still make money with the single family home side. So yeah.
All right. So you get started with the client, you understand what their why is, you kind of build out a strategy around kind of what their acquisition abilities are, right?
Yep.
And then you kind of go from there. So with a clean slate, where are some of those good pockets for acquisitions right now?
Yeah, I mean, we've studied 339 markets, so I don't want to take all the credit because acquisitions is only as good as the data behind it, and data is only as good as the acquisitions that can put it into principle. So we've got 3 full-time data analysts, arguably, I would say the 3 best Airbnb data analysts in the asset class. And we do nothing but look at markets, listings, and opportunities every day, all day. So it's kind of a cheat code where most people are scrolling Zillow or studying AirDNA on the weekends or after dinner. We have a team that pores over it all day, every day. So we've studied 339 vacation markets in the US. And what we look for is 4 core pillars. So first is, what is regulation? So kind of like we talked about beforehand, is what's the regulatory environment in this market? Is it worth going into? Is it gray? Is it unestablished? We need to figure that out. Then we need to understand, what's the return being made? So if I buy a house for X and can rent it for Y, how much yield is in this market? And most markets, it's break even or zero. And that's the state of the game. Then we look at, well, it's legal, the returns are there, but how many opportunities actually hit the market? And so because we're putting deals under contract for investors every week, I can't sit back and cherry pick a once every 6 months a deal hits the market. You can as an individual one-off, hey, I'm just married to Outer Banks, or I'm married to Tupelo, Mississippi, and I'll cherry pick that one-off home run. That's great. But at our scale, investors want to get deals, right away. And so for us, we have to find markets where there is inventory. And then the 4th pillar is demand. Most investors we work with love high demand markets. A lot of those emerging markets can come with, high returns, but the risk in a recessionary environment is significantly greater. The good news about a recessionary environment is wealthy people still travel. They just change their travel habits. What I mean by that is, let's take a wealthy family out of New York City. Maybe when times are good, they're traveling to Italy, the south of France, things are good. But when things pucker up, they're going to go to the Catskills or the Poconos. So they're still going to get out of their 400 square foot shoebox apartment, and they're going to drive an hour and a half to the Poconos or to the Catskills to escape. So if you're a top 10, top 20% property in one of those markets, you're still getting booked in a recessionary environment. If you have a bottom 50th percentile, you're vacant. Now, maybe you're not getting 700, 800, 900 a night when times were good, but you're still booking for 400, 500, 600 a night and making money if you're a top tier property. And that's what we focus on with our clients, is how do we set it up to be a top 10, top 20 percentile property with high design, high amenities, good photos, optimizing our pricing, all of those things. Because it's not just buying a good property. I could give you a really good listing and I'm like, dude, this is going to crush it. But if you don't set it up correctly, you don't design it the right way to nail the target demographic, you don't have a good pricing strategy, you won't make money. So this business is a full end-to-end. It's not just finding the right property in the right market, but it's also renovating and designing it correctly and then operating it with the highest and best, function as well. So we try to take clients end-to-end. It's not just, hey man, here's a good property, but we got to set it up correctly. We got to amenitize it and take it full scope to be a true profitable endeavor.
So, you guys focus on the due diligence on the acquisition side. Are you also helping them with management solutions, or what does it look like after you're, done with the project and it's up and running and it's a live listing?
Yeah, no, I mean, operationally, you got 3 choices as an investor. You can manage it yourself. You can hire a virtual assistant overseas, or you can do passive full service, hire a property manager. We will assist with any of the 3 options. So I would say 60, 70% of our clients do want to self-manage. If they're taking advantage of the short-term rental tax loophole and hitting material participation, they're definitely going to be doing that, at least in year 1. So we'll help with, hey, here's, because again, our team, our core, we've been operating Airbnbs remotely for 5 years. So, we'll help, get your automated messages, get your listing built out, the photos, the description, calendar sync with cleaners, et cetera, so that you can be successful. So we'll help that if they want to self-manage it. And then I'll say there's another 10, 15% that are like, hey, I don't have time to do everything by myself, but I also don't want to pay the premium of full service third party. And so that's where hiring a virtual assistant overseas, which we've helped clients do with as well. So you can find somebody who's done 2-3 years of Airbnb guest communication experience, and it's a more affordable option. Again, they're not going to do 100% of everything, but they'll take care of 80, 90%. You'll fill in the gaps. Or if they just want a local, third-party PM, we've obviously built a pretty good Rolodex the last 3.5 years across these markets. So we have some good local boutique options. We don't necessarily say, hey, here's a national, type player, but more here's a really good where you can get that attention and customer service if you're in Austin, Miami, Joshua Tree, Sheboygan, Wisconsin, insert market here, so that you have some good options. Again, you're going to pick who you like, so you'll interview them regardless. As an investor, it is your house. But we just don't want you to have to start from scratch or get tied down with, a non-good operator. So based on the 3 choices that the investor wants to make, we're going to help guide any of those 3 options.
Okay, very cool. And while I'm thinking about it, do you do anything internationally, or all of this is US based for the most part?
All US based. We've been asked a ton. We've researched a ton. We broke down all of Spain. We've dissected the Caribbean. So, from a data access perspective, we're very fortunate with our data partners, to have some really good insights. But you run into issues like lending is the first big hurdle. So not everywhere can you put 10, 15, 20% down and go get a loan. Some places you can't get a loan, period. So you're going in all cash.
Right.
Depreciation and tax savings is the 8th wonder of the world, and it doesn't really exist outside of the US. So on top of it, there's so much green grass and opportunity here in the States that it's like, why would we leave? So in our opinion, we're buying, like I said, several deals every week, every month, that like, why would we stop? If we ever ran out, we would have to pivot the business to look at that. There's just no incentive where I'm getting outsized returns. I have worse lending conditions. I have worse infrastructure, and you carry more risk. So kind of the benefit of Airbnb being a US based company in San Francisco, when you see a lot of those bad headlines in Europe of just outright bans, in Barcelona, like, they're not going to issue a single permit starting in 2028. Now, again, subject to change, but like, that's a heavy risk. But again, it's a foreign entity. So Spain looks at Airbnb differently than, Florida does here in the United States. So when I look at everything's a pro and a con. So when I look at what's my opportunity and my risk, we just don't see that it's worth it right now as we sit here today.
That makes sense. That makes sense for sure. Now, I know you had a couple slides to run through. Want to do that at this point? Kind of jump in?
Sure. So when I talk about high design and high amenities, these are some of our clients' properties. So we talk about coming in and how do I differentiate? So things like, fire pits, playgrounds, mini golf, putting in a pool, having really good design, offering things that nobody else is doing. Here's one in the Poconos, again, like I talked about, really great market is, man, I've got the pickleball court, an in-ground swimming pool, which is super rare. Less than 5% of properties have a private pool, in that market. Again, run the same trap, here, doing creative things like indoor glow in the dark miniature golf, things that just nobody else is offering, bright, bold colors. This is what you get, is people to stop the scroll, is what we talk about. Everybody's just scrolling on their phone. I think officially over 51% of every booking on Airbnb is on mobile. You'll have to double check me in that quarterly release, but having the ability to stop the scroll with things that differentiate, bunk bed slides that the kids are going to be blown away when they book at, having sand volleyball, outdoor bowling, just different ways to differentiate, murals. So a lot of our clients, it's figuring out, how do we differentiate, whether it's groups of friends, bachelorettes, dudes and bros, different things, putting in, a kid's, kind of playhouse zone. And so we're always looking for what is that next amenity, that next differentiator. And, again, these are not bought that way. And I'll kind of show you what I mean. We take and we find a deal that looks pretty ordinary. So most people don't see this as a winning property, but we see, what can we turn it into? Hey, I got room to put that pickleball court, the mini golf, the fire pit. All these deals we say are built. They are not bought. Nobody who owns these elite top performing short-term rentals is selling right now. Right. Rates are high. It's not a great market. Like, unless you've just got a boatload of equity, you're trying to take chips off the table. Nobody is selling A-level assets. All the Airbnbs you see for sale are B's and C's in my book. Yeah. So I'd rather buy the house next door for $100,000, $200,000, $300,000 cheaper and turn it into the next profitable short-term rental in that market. So I talked about, this is what that property looked like before. And so we turn it into a winner. I had a blank space of opportunity. Yeah. Getting contractors and designers in there, and that's kind of the good news. We built a really good Rolodex. So investors, they don't have to find a contractor from scratch. We're like, hey, here's our network of contractors we've worked with in Miami, in Austin, in the Poconos, in, Gatlinburg, in Joshua Tree, insert market here, so that you don't have to do that work yourself. And that's kind of the good news. Again, take that plain property, turn it into a winner.
Very
So
cool.
you just make it so much better. And again, high design, this is boring and plain, but this is 50% of every Airbnb in the marketplace.
Mm-hmm.
And that's kind of the good news is we want a high design, high amenities. We're going to stand out in a recessionary market. And I always like to talk about how do I take advantage of non-revenue generating spaces. And a garage is a perfect example. A garage in short-term rentals is worthless. It is worth $0.
Yeah.
So I need to understand, how do I turn it into a revenue producing space? And my options are things like game room, making it amenity, or making it livable space to add occupancy. So again, here's that conversion, is just taking it from a plain garage, turning it into a kid's bunkhouse with the slide, the arcades. Now, all of a sudden I've increased my occupancy. It's also a good real estate play. This is, you can see drywall, insulated, architectural plans, bring it under air. A standard 2-car garage is roughly 400 square feet.
Mm-hmm.
This conversion right here is roughly 30 to 35K all in with the slide and everything. And in this market, where things are trading at 250, 300 a square foot, I just added 6 figures of equity and I spent 30 to 35 grand. So on day one, it's a good real estate move. In addition, increasing your occupancy. And so these are just the kind of things, again, taking a blank space and turning it into, something amazing. And so we just run this blueprint over and over again of, hey, what is boring? And now it is exciting. So again, that's what you have to do. You're not going to find these deals, at least like they don't make any money because the guy selling it's charging an arm and a leg. But you need to take what looks to be boring and make it a winner. And that's what we want to do with our clients is, how do you stand out in bold colors, accents? Again, depends on the market. You have to do the right thing in the right market. But that's kind of what we do with people. So
very cool. Makes sense.
Yeah.
You've almost got it. Looks like you have like a rinse and repeat model.
Man, it's once you know what wins in different markets across the country. So again, it's just figuring out who am I appealing towards? Is it, families with kids around age 5? Is it families with kids around age 15? Because even that differentiation would be the difference between, am I going to put a playground in? Well, 15-year-old kids aren't going to love that versus the 5-year-olds. Maybe I go with like a mini golf or, the pickleball. Is this a groups of friends market? Is this Nashville or Scottsdale where I got bachelorettes and groups of women because I bought a place near Old Town? Is this dudes and bros on a golf getaway? Yeah. So I need to understand who is traveling to my market. I can't come in with a preconceived notion like, oh, I'm going to build a cool place for families because I want to go here. Maybe this market, more people travel as groups of friends than they do families. So we always have to let the data dictate our game plan when we go into a market, because it is different on every single market.
Definitely.
So yeah, I mean, you want to dive into like underwriting? What do you want to go to next, man? I love this stuff. So you tell me the direction you want to go to.
Let's check out, underwriting. Yeah. How do you underwrite a deal?
Yeah, let's look at a deal. So obviously we can see something that might visually look really good, but the numbers are going to dictate everything. So let's just take a deal here that I'm buying for $535. I'm putting 20% down with interest rate 7.5. Again, those, you might do 10, you might do 15, you might be all cash 100%. We're going to come in on the front end and say, hey, what do I think I need to do to this property to make it a top performer? And that's just based on who my competitors are. So I need to understand, what do I need to add to this property to get it to the level of my competition? So on this deal in particular, we needed to paint the inside. So we need to add a fire pit, add a game room, put in beautiful furniture, decor, accents, etc. We're going to convert that garage, like we talked about, to a 5th bedroom. That was the highest and best use. Update the fixtures, things like the fans, the light switches, all those things to be more upgraded. Put in a playground and mini golf. So the total out of pocket on a deal like this, client's budget was $250K. So we want to obviously be cognizant of that. So when somebody says, hey, what's my total out of pocket? That's everything to get it rent ready, down payment, closing costs, all the renovations, amenities, furniture design, anything I need to get rent ready. And then when I'm going in and saying, okay, well, what's the deal level metrics look like? Well, the revenue target's again going to be pulled from my competitors. So if I have a 3-bed in South Austin with a pool, Well, I probably want to know, what are all the other 3 beds with pools in South Austin generating in revenue? What amenities do they have? What's their design and interior look like? These are all the things I need to understand to be successful. And then I can understand, okay, does my property look closer to the guys generating 105? Or is it probably going to be closer to the middle of the pack, the guys doing 120? Or, hey, you know what? If I crush my photos, crush my amenities, and get good design in there, I can absolutely compete with the 135 guys.
Mm-hmm.
I need to account for all my expenses. This is something I'm a stickler for. I would look at about 150 to 200 deals a day for the last 3.5 years. I've been operating Airbnbs in 12 states for 5+ years now. So understanding what is realistic is what trips people up. And I'm sorry to all the Instagram and TikTok influencers, but the first thing I look at is their underwriting. And 9 times out of 10, they are over projecting revenue or undershooting expenses or both. And so, yeah, every deal is a 30 cash on cash. And you know what? If every deal was a 30 cash on cash, Warren Buffett, the guy who's one of the most cash rich dudes on this planet, would be buying Airbnbs. And so there is a reason we have to understand what is realistic and what is not. And so when I talk about accounting for, this is a small business. If you go buy a nail salon or a sandwich shop, you're going to have expenses that come to an operating. So I need to be able to accurately account for everything that's going to hit my credit card when I own this piece of real estate. Internet, water, electricity, pest control, pool maintenance, software, cleaning, supplies, property tax, insurance, HOA fees, CapEx reserve. So again, we are dealing with physical real estate. Stuff breaks, roofs, walls, HVACs, all these big CapEx items. And so again, I need to understand, what is my realistic operating expenses on this deal? And at the end of the day, if I generate 105 grand on this and I cover all my expenses, my debt payment's the same every month. So that's kind of the good news. Like, rain or shine, they're going to charge me the same every month on my debt.
Yep.
And then what does that leave me with on a free cash flow basis?
Mm-hmm.
How much am I paying down every month? Now, again, this is just a year one outlook. If I wanted to really nerd out, I can go to the 30-year AM chart down here. You also might cry at the same time when you see that first payment. So if you've ever looked at an amortization chart, just cover your eyes.
Yep.
But I can look at, hey, what am I paying down in year one? I can also understand what's my real estate appreciation. We take a very holistic approach. So we look back 30 years. If you look back the last 5 or 10, you might get skewed. So statistically across the US, 4.8% is the US average over the last 30 years. Now that is an average. Real estate is very local. Miami, Florida is appreciating way more than Biloxi, Mississippi. So you need to understand where you're at. Do you think you're in a market? You could look again back at a 30-year historical to understand. And so again, this deal was slightly below the 4.8 average based on the numbers. And then again, the tax savings, the short-term rental tax loophole, material participation. So for our clients who do want to take advantage, again, I need to understand what's the land value since I can't depreciate land. What are the SLAs? Bonus is currently at 40. I know President Trump has teased several times now in speeches bringing back 100%, which would absolutely juice the depreciation in taxes. So we will hold our breath for that. But I can understand what my depreciation is, what tax bracket am I in, so I can understand realistically how much I'm going to save in taxes by buying this short-term rental. And so holistically, for our investors who want to see the whole picture, I can look at my cash flow plus my principal pay down plus my appreciation and my tax savings to get a holistic approach about this investment. Or I can isolate a singular return metric to understand, hey, what is just my cash on cash? That's just, hey, what's cash in my pocket divided by cash out of my pocket? Simple metric. Hey, how much am I paying down every month or every year? How much is my home value growing year over year? And how much of a less smaller check do I get to write the IRS and Uncle Sam? Yeah. So we want to be able to, before we write an offer, we want to look at these metrics to understand, is this a deal worth writing on? And so this is the level of detail we're going to do with any investor. And that way I have data confidence before going in and writing that offer.
That's awesome. Makes perfect sense. Now, what are you using to analyze the short-term rental market?
So we, as far as like from like a data and numbers perspective,
mm-hmm. Yeah.
So we have 4 key datas that we're pulling from: AirDNA, Rabu, Hungry Robots, and 205 firsthand data. So obviously the firsthand data has been absolutely huge, especially as we've grown. We're pulling in all of the third-party data at a raw row level. So I do not go to airdna.com and type in something where I know that's the consumer facing product. We have a very cushy partnership with both them, Rabu, and a couple of the other firms where we're pulling in all of the data they collect at a raw row level. And then we've been building our own formulas and algorithms the last 3.5 to 4 years and making tweaks and refinements. Because when you are going onto one of those websites, you're going to get all the data they collect in a very nice UI UX form. But here's the problem. That data is mixed with good data, not good data, and kind of middle of the road, unsure data. And so because this asset class has people who are renting a second home out on occasion, it has data points of this guy's been live on Airbnb for 3 years and this guy's been live for 3 months. And so it's making a guessing assumption. So the problem is when you're trying to compute averages or ADRs based on good, bad, or indifferent data mixed together, you're not going to get a directionally correct number. That's why we've been building our own formula. So we're going in and filtering out right off the top any listing that has not been live and generating revenue for over 12 months. We're also eliminating anything that is not a full-time rental. I do not want to compare my data or what I think I'm going to generate as a full-time investment with Billy, who rents out his place in the Catskills, but uses it because he's a New Yorker, uses it for 2 months a year. All that data is flawed and can really affect the decision-making process. So the good news is we're just making tweaks and refinements with it. And then the analysts will build all of those listings into, different formulas and different references. Here, dude, let's go nerd out some more. Why not? Let's keep going here. So I'll give me 1 sec on the screen share. 1 second. So let's go to... I'll really show you how the sausage is made. Why not here? So let's go to. Okay, you can pull me up here. All right, so this is a little behind the scenes. So this was a data dive we did in March of 24. We update our data quarterly because you have to understand trends and everything. So obviously we would not use this for decisions. We would consider this out data. So this was an overview we did of Miami. Now, what I have charted out here is all the top revenue producing Airbnbs in Miami. Now, again, remember, we only do single family homes. If I did condos, you would see a massive cluster down here in Miami because it's a lot of condos. Right. But we only do single family homes. So right off the bat, I understand if I'm going to buy in Miami, where do I need to geographically be? Well, I've got this kind of pattern due north, east of 95. And then I've got this C pattern. And I'm like, okay, now I know where I need to be. And then what do I need to look like? Well, all the insides are whites and grays. And then I need space for a pool table on the inside. Swimming pools make 30 to 45% more revenue. I better have a swimming pool. Also have putt-putt, sports fields like pickleball, fire pits, large decks. Almost everybody's turfing their yard. A, it's less maintenance. B, it's more sexy and luxury to charge a premium nightly rate. Okay, well, now I know where it is, what I need to have. Well, how much money can I actually make? Well, now I can look at, hey, what are all the top performing 3 bedrooms generating in revenue and where's their links? What about 4 beds? What about all the big boys, the 5 pluses? So now I can understand all of these metrics to say, hey, where do I need to be? What do I need to buy? And what amenities do I need to add to it? And so those are the different things that, we're dealing with when we're looking at markets data. So when I say that we're deep diving 339 markets, like this is kind of the funnel pattern that we're running. Now, again, just because I know where to buy and I know how much a 3-bedroom can generate, that does not mean it's profitable because, I got to go see what I'm buying it for. And you're going to put debt on that house. So if I'm buying it for $1 million, doesn't mean it's profitable, but you have to kind of run that whole thing to understand, okay, well, if I'm going to start buying in Miami, Sheboygan, Joshua Tree, Austin, insert name of city here. Okay, well, where's the best place to buy? What's the revenue being generated per bedroom count? What amenities, what design style are amongst all the top performers? And then I got to go see, okay, what's available for sale today on Zillow? And can I go try to recreate one of these top performers? And is the price and revenue spread, is that wide enough for me to put money in my pocket? Or is there no spread and I break even? Or is there an upside down spread and I lose $1,000 a month?
Yeah, no, it makes perfect sense. So if I'm an investor and I want to work with you, what does that look like from a cost for your services standpoint?
Yep. So we do several different layers of, hand holding. So everything from, hey, take me A to Z, find me the property, narrow down the market, help me renovate it, help me design it, help me set it up, help me operate it, to, hey, I just want to, get market insights from you, or hey, I just want design and construction. So most people use us for full end-to-end because they don't want to do anything and they'd rather a professional do it. Some people are more entrepreneurial DIY and they want to fractionalize us. Either way, depending on the level of handholding and services that you need, you're going to be somewhere between 5 and 18K. And so we'll build a package really just based on, again, how much service, how much time, how much handholding, and we'll take you A to Z, get you your property, and we're with you again all the way until you're live on Airbnb. So shameless plug, if you want to, dive in more, talk about, I flash a lot of stuff. We're a pretty open book. We are a data company, so we might as well show you data. Feel free to go to strsearch.com. You can book a call on one of the Calendlies. You'll either get my jugular or one of the other, team members will talk to you, and, we'll discuss your situation, how we can help, what we've done with other clients. Is there a good fit, where you're at in your journey? And again, whether you're trying to buy your first or your 11th, we've helped build out institutional funds, and we've helped, one-off W-2 dentist, doctor, lawyer, insert profession here, and kind of everything in between. So, we need to customize it for you. There's no blanket underwriting. There's no blanket strategy that works best. It's what's your situation and what do you like and not like.
Perfect. So I'll put the link in the comments below in the show notes as well. So Taylor, if we are just looking for one piece of advice in acquisitions, knowing what what would that one piece of advice be?
Man, I would say know your numbers, and you're only going to know your numbers through practice. I didn't get good at underwriting and acquiring properties by just doing one. And so to me, do a ton of mock underwritings. You're going to fail forward. I think that's why I fell in love with this asset class, because if you fail 70% of the time in baseball, you're in the Hall of Fame. And so being a washed up baseball guy, I was used to failure on a day-to-day basis. And that's kind of what this is. I look at 150, 200 deals a day to hopefully find 1 to 2 winners. So, what I would say is get the repetition in, because once you continue to see what bad deals look like, when you come across a good deal, you're going to know what it looks like. If you don't get enough reps in, you don't know what a good versus bad deal looks like. And so that's the advice I would give. And again, this is what I was doing before being full-time, is like, how do I just practice looking at, okay, what can this generate in revenue? What are my expenses? What's my debt payment? Is there any money left over? No, boom, on to the next one. Okay, what about this one? Boom, boom, boom. So again, pick a market that you want to go to if you're trying to, take that entrepreneurial approach. I started with where I vacation with, again, like, you might not have as much data access as I do, which we're very fortunate, but start with where you travel. Because if you like to travel somewhere, probably other people do, unless you kind of like one of those weird guys that goes to weird places. But, again, like, I used to go to the North Georgia mountains because every other Floridian would just get in their car and drive 8 hours north and hit it. So I figured people probably travel here. So I could start looking at cabins, looking at opportunities, understanding that, hey, I'm an hour and a half from Atlanta, big other population hub. The national park investing strategy, hey, be close to a national park. That does have opportunities and dividends. So, pick something that, be within a 2-hour drive of a major metro. There's a lot of different strategies. Pick one and start and go deep on it, and then decide, does this work or not, and go to the next one. I see too many people look at a million things, maybe national parks, maybe cabins, maybe beach houses. You don't have enough bandwidth and time and team members like we do to go deep at all of them simultaneously. Pick one, dive it, see if it works, and then go to the next one if it doesn't.
Makes sense. Love it, love it, love it. So Taylor, thank you so much for taking the time today. This has been extremely informative for us. I'd love to welcome you back at another time, and because there's so much that we could have covered.
Dude, I know. I love this stuff, man. Happy to help and give back as much data and insights you guys need to help your group.
All right. Very cool. And thanks everybody for tuning in. And as usual, if you're wanting and you're ready to build a scalable short-term rental business, feel free to reach out to me directly. My calendar link will be down below as well. And we'll see you again next week. Thanks, everybody.